You bring up a good point with regard to ESG, and I want to talk about that undeniably hot trend that's really taken the ETF world by storm. That's environmental, social, and governance. That trend is still going strong. It's really remarkable, and flows into sustainable ETFs are up roughly 50% from where they were this time a year ago, as more and more companies attempt to weave ESG into the fabric of their DNA. Just last week, Schwab joined forces with Ariel Investments to launch Schwab's first ever ESG ETF and first ever active fund, the Schwab Ariel ESG ETF, ticker symbol SAEF. David, tell us a little bit more about what sets this fund apart from similar products that are out there. And what does it mean exactly to take an active approach to ESG metrics through an ETF?
Yeah, I think there's a couple things that set this ETF apart. First is our partnership with Ariel Investments, one of the oldest and largest minority-owned investment shops in the world. They have nearly $20 billion in assets, and Charles Schwab has been working with Ariel for around 20 years, really dating back in the early 1990s to doing a survey on investor attitudes, especially Black investors, which has been very telling to understand the dichotomy of investors in the universe. So we take that partnership in the formation of the Ariel ETF, the Schwab Ariel ESG ETF. And Ariel really brings a unique investment style where they look at a value-oriented approach in the ESG space and looking at small and mid-cap names. And small and mid-cap ESG strategies are really hard to come by. So we think it really serves a really strong point in investors' portfolios, combined with many of the more traditional large-cap growth-oriented ESG strategies that are in the marketplace today.
Value might be hard to come by, too, some would argue, given just the amount of flows that have gone into ESG and what that's meant for the multiples of companies that are seen as ESG compliant. Tom, what are your thoughts here? Is there room for new ESG offerings, given all of the trends surrounding this area? Or are we starting to get oversaturated here?
Well, it's surely a popular area, Leslie, and there has been some discussions about maybe standardizing ESG as far as the research. However, the horse has already left the barn, let's just say, because there's so many choices, and all the management companies and index providers look at this in so many different ways, which is good for the average investor. You look at the unique approach that Ariel brings and the fact that they've been at this for decades, where there are a lot of companies that can't say the same. However, it does require more research for the average investor, and most importantly, the average advisor, because the average advisor's clients out there is expecting, not just requesting, but expecting some type of ESG overlay, and that might come in a lot of different shapes, sizes, and colors, and that's going to be really important going forward.
Yeah, they're expecting that overlay without sacrificing returns, which of course is the tightrope that managers have to walk.